Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Rob, thanks for taking the time out to join me on the show, mate.
Nice to have a chat. Thank you.
For everyone that's listening to this, they probably won't know that we actually had this conversation about a month ago, and we had a few technical difficulties, and you've been generous enough to give me some of your time again at the end of financial year. So I'm thrilled, but at the same time, I guess that speaks to the character of you and the team. So thanks once again for coming on for round two.
No, that's fine.
Where we start, as you know, is we talk about your backstory and how you came to be, I guess, in the position that you are. But before we get to that, for, I guess, the limited few people who don't know much about Brickworks or Soul Pats, maybe you can give us the origin story of the business, how it came to be named Washington H. Soul Pattinson, and I guess just hear it in your own words.
All right. Well, welcome everybody. Washington H. Soul Pattinson was started by my great-great-grandfather back in 1872. And in those days, obviously, it was private. And he was one of the first people in Australia to set up pharmacies. And during that period of time, he met a guy called Caleb Soul. And towards the turn of the century, Caleb Soul thought that his son Washington wasn't fit to continue on running their part of the business. So he offered my great-grandfather, Louis Pattinson, the business. And with respect to Caleb's son, Louis Pattinson called the company Washington H. Soul Pattinson. So that was how it originally started. It's been listed since 1903. Obviously, in those days, it was purely a pharmaceutical operation. And it wasn't really till things started to pick up after the Second World War that things started to change. And we moved out of pharmacy. First of all, the share swap with Brickworks, and then over time, New Hope, TPG, and these things have followed on over a period of time. But it started off as a pharmacy. We still have our pharmaceutical roots through a 20% shareholding in API. So that's a brief rundown.
Yeah, it's such a, I guess, enviable track record to say that you've been listed for over 100 years and in existence for longer than that. We'll get to some of the specifics about what the business does and your role, but maybe you can just explain how you came to be director and I guess your formative years, I believe, growing up on the farm and moving to the city for an internship. Maybe you can take us through that part of your life.
Right. Well, obviously, as I mentioned before, my great-grandfather, Louis Pattinson, then one of his sons, Fred Pattinson, took over from him. And then my uncle, Jim Millner, took over from Fred. And then I, in 1998, I first joined the board in 1984. So in 1997, I think it was, not 1998, 1997, I became chairman of Washington H. Soul. So you can say over that period of time, there's only been 4 family members that have been chairman of the company, and I think that probably shows something about the longevity, the long-term thinking that the company's developed over this long period of time. And I might just add also that, just in case we don't touch on it, as I mentioned, when we started off in 1903, this company has never missed paying a dividend, even through the depression years. The last GFC, we actually raised our dividend in the GFC when other people were struggling to pay it. So we've had a very proud history of success and been able to grow the business over a very, very long period of time, mostly due to the very good people we've had working for us and running the various businesses that we've invested in.
How about you, Rob? growing up on the farm, do you think that taught you something about hard work, about earning your stripes?
Well, I didn't actually grow up on the farm. In the late 50s, the family bought a family property. Then my father bought a property in 1959 in Cowra, and I was 9 years of age at that stage, and I was already at school in Sydney.
Okay.
So I continued my education in Sydney. Then when I left school, I went and worked for a stockbroker for a period of time. And then I got the urge to go back to the rural life after a couple of years in working in Sydney. And
what drove you back there?
Sorry. And then I stayed there till 1984 when I was asked to join the board. And obviously, from 1984 through to 1997, I became a lot more involved. And in those days, we were developing coal mines in Indonesia, so I was pretty well occupied from 1984 through to 1997 before I actually came into a full-time role.
Can you talk us through that that time and the project in Indonesia? I think it's one of the things that jumped out to me, and I'm guessing it's one of the things that you're probably more proud of, both as a business person but also as an investor.
Yeah, I think I've been very fortunate to be where I am in the period of time that has developed since 1984. The affluence that has come through Australia at that period of time, and I use Commonwealth Bank and CSL as a great reference to that period of time when Commonwealth Bank floated. I think total was about $5.70 or something, some figure around that period. The share price now is about $70. The dividends, are worth more than the $70 that the share price is worth. And you look at CSL, I think it came on even lower, and it's been split, and the shares are still worth about $300. So they're actually worth $600. So I think that gives your listeners some idea of how the people's affluence have grown over that period of time. And you mentioned that period of time where you're developing this coal mine in Adaro, which is in Kalimantan in Indonesia. The very first time we went up there, we couldn't find it. They'd been in there with a couple of bulldozers scratching around, and the coal is actually at the surface, so you don't have to take much overburden off. And over that period of time, watching that develop from the first day we flew in a helicopter and couldn't find it in the jungle, till the day we sold out when it was doing 25 million tonnes of coal. We built a port as well, and just watching the local inhabitants who were subsistence farmers in that period of time grow from subsistence farmers through to people working on the mine and little stalls opening and villages opening and people having the use of money where they never had money before. It was probably one of the highlights of my life. Watching something like that develop was fascinating.
I can only imagine it would be, but it's not the only thing that people will know you for personally and professionally. How about your day-to-day nowadays, Rob? What do you get up to day-to-day? I think I spoke to some guys in the team. Obviously, we had Tom and Will on the show recently. But what does your typical day for you look like?
Well, obviously, my days have changed dramatically over the last few months. But before that, obviously, with the various businesses we have, I do quite a bit of travelling. Well, I did quite a bit of travelling. Both when you have national businesses, right throughout Australia, and also I go to Singapore every 2 months. Sols has an interest in the pharmaceutical operations in Singapore, and Brickworks have just gone into America with a business in America. So I've been last few years probably busier than I've ever been. But my day is very occupied. I sit on 8 public company boards plus the various smaller operations we have in Sol Pattinson that aren't listed. And I think that the thing I enjoy most is I do something different every day. It's just I don't have a mundane life. I might be dealing with TPG one day and then Brickworks the next day, and et cetera, et cetera. So I'm very fortunate to be in the position I am.
Do you still sit in and oversee a lot of the investment committee and research that comes through, or Do the other guys in the team think most about that and manage that?
Not as much as I used to. We now have a small team of about 10 guys in what we call our investment bank, which is Pitt Capital Partners. So they do most of the heavy work. Obviously, when companies have money, we get a lot of people knocking on the door with ideas how to where for us to invest in. So I do quite a few. Obviously things are slowed up a bit now since COVID, but up until Christmas time, we were still pretty active talking to people coming in with ideas, and we'd filter those ideas, and they would then go through Bid Capital Partners. We do our due diligence on that, and then if we thought it was a strong enough proposition, we would then take that to the board.
Mm. How about when you sit back and that's the day-to-day and kind of your role as you see it as an allocator and decision maker. How about when you zoom out a bit and you look back in time and you think, the business has done so well for such a long period of time. What do you think are the key differentiators between Soul Pats and pretty much all the other capital allocators that you see in the media and just around the traps?
Well, I think we've always had a long-term vision. And obviously, when you build a brick plant, for example, 40 or 50-year time frame on that plant. A coal mine is a long-term business. Pharmaceutical operations are continuing day in and day out. So I think we've always thought long-term. We've never been too interested in what's going to happen tomorrow. It's all about down the track. And we haven't always, but generally speaking, we've been able to pick very good people to run those businesses. And I think that's probably been the main key to our success, is having very, very good people, because Todd Barlow is our managing director here, and we have less than 10 people in head office, excluding the investment bankers. So we haven't got anybody to send out and run your business if it doesn't function well. So I think that's probably been our greatest success story, is being able to pick good long-term people. And the thing that fascinates me when I go around a brick plant or around a coal mine or through a pharmaceutical operation is people talk about their plant or their mine. This is the manager. He takes ownership of these operations. So it starts at the grassroots, where these guys grow up with the business, become involved in the business. And in these days, a lot of them are stakeholders, own shares in the various companies. And that gives me great pride when you talk to these guys down who actually are running the businesses that enable us to generate the cash to do what we do with it, for them to be talking about their factory or their mine or their pharmaceutical operation. They take ownership. And then that flows through to the guys on the floor under these managements, and it just flows up through the top. And most of the CEOs or MDs of the various businesses we're involved in have been with us for a long time. Some of them have been there for 20 years. E.G. Partridge, for example, of Brickworks, has been around over 20 years. It's an incredible story.
Maybe using him as an example, or maybe even David Tier, I'm interested, and our listeners would be very interested to know then, obviously management plays a big part in your process and you're thinking about which businesses to partner with or take over or what have you. How do you think about what makes a good manager, other than, I guess, that alignment? Is there anything in particular, maybe it's a personality trait or something, that you look for in these people?
Well, obviously, you get a sense of people over a long period of time, and obviously you do your due diligence. So that all comes out in due diligence, and generally speaking, I've got a pretty good feel of when I meet somebody the first time. We're going to be able to work with them, or they our sort of people. We're down to earth type people. None of us got boats, or none of us got Rolls Royces. Or planes. We fly business class when we go overseas. Sydney to Melbourne, we travel. Brisbane, we travel economy class. We haven't got airs and graces about us. So I think we've all got a pretty good ability to pick people, and I think that's where you start from. We don't have much time for spivs.
Do you remember when you first met David?
Yeah.
I mean, that's a good example. So you knew straight away that he was the right person for the I guess the ambition and the strategy?
Yeah. We obviously Michael Simmons, who was actually running Soul Pattinson Telecommunications at that time. And I should go back and tell you the story of how we got into TPG. He introduced me to David when David was looking at expanding his operations. And, I had 2 or 3 nice dinners with David, and we sat down and talked about things and got to know each other. And, he's a fascinating man. He's been so successful in what he's done. I still claim he's the brains of the telco industry in Australia. To me, he's that far in front of anybody else. And that's why we've been able to do what we're going to do. And it's going to be interesting now. We've joined with Vodafone to see how we take that to the next step.
How about, Rob, just circling back to you again, when you're getting up and you're meeting with these people, what is it that really excites you about your job day to day? Because, I mean, looking from the outside, we could assume that, you'd be pretty comfortable, you could probably hand over the reins to someone. What is getting you up and excited to go to work every day?
I think, as I said earlier, doing something every day and seeing the challenge of trying to keep Soul Pattinson at the level it's been at for a long period of time. I don't want to be seen as the one that let the ship sink. They always say the first 2 generations make the money and the third one dissipates it. But I'm 4th generation, and Tom, my son, who sits on the board of Soul Pattinson and also runs a funds management business, he's 5th generation. So we're in unique circumstances. There's probably very, very few businesses in Australia, and I don't think there are any publicly listed businesses that go down 5 generations. So again, we've got a lot of heritage there, and as I said, I don't want to be the one that's been known as the one that blew it up.
Well, that's a pretty good incentive, if you ask me. Sorry, go on.
The new team we've got at Soul Pattinson, and Todd's been with us a few years now. He's he knows what he's doing. And Lindsay Partridge, and as you said, David Teo, and unfortunately Shane Stephan is just retiring from New Harp, and he's been with us for a long period of time as well. So,
how about if we switch gears now and just talk a bit about the investment process, I guess, generally. Obviously, you mentioned it at the beginning of the recording there, dividends being really important to Soul Pats, but also the companies that you look to invest in.
Yeah.
A lot of them pay dividends, and Soul Pats, being a shareholder, obviously receives those dividends.
Yeah.
Why is it such an important part of the process?
Well, as I said, we're virtually an investment company. We invest in other businesses. So the first thing we look at is those companies have to generate cash. As you mentioned, we pay out cash dividends. So we need to generate cash dividends from those businesses we invest in. So then we've been able to pay, as I said, we haven't never missed paying a dividend. And I think even since the GFC, there's only Ramsay Corporation and ourselves that have been able to put the dividend up. And I think we're now on our own because in the last half, Ramsay cut their dividend. So we're out there on a limb at the moment as a very, very unique business. So we actually concentrate on cash more than we do on our P&L, because all the different businesses, we always have what we call vast amounts of non-regular items, and they add up to all sorts of different things. So we always concentrate on the cash. We're not too fussed about it. We always want to make a profit, but with the accounting, so we have some equity accounted investments, and we have a different accounting system. So we concentrate on cash.
How about then, if I can bring in maybe 2 extreme examples for Rob, one being Amazon in the US and maybe Xero, the accounting software company here in Australia or from New Zealand. How do you think about them? Is it in your thinking that a business like that doesn't necessarily report statutory profits, but you can clearly see that it's free cash flow or could be free cash flow positive? Would that ever be, or would those ever be the types of companies you could hold?
Well, obviously they're new age companies. They're all starting off, and obviously all doing very, very well. It's very difficult when you start a business to be going 100 miles an hour on the first day. classic example is the press in the last couple of days. Amazon has just opening up this massive site out at one of our sites out of Brickworks at Oakdale there. Mm-hmm. So, they're investing all this capital into Australia. They've invested a lot of the capital into America, for example, a lot of the capital all around the world. So in time, you will see Amazon paying dividends, but they're not startups, but they're newish type businesses. And you're seeing a lot of this, particularly in this new age. And I think this is one of the things your listeners are going to find quite remarkable going forward, is when this 5G technology comes in. It's so much faster than what you're going to be able to do with your phone. Mm. It's going to be transforming. And we're seeing that now in business, what's happening with technology, with online and e-commerce, et cetera, et cetera. I must admit, I'm not in the age group to fully understand it all, but because it's all moving so fast. Mm. It's all right for you young guys.
I heard you say in a previous podcast or an interview that one of the things you look for is a business must make money in a downturn. Yeah. And it kind of stuck with me because I guess it's that focus on resilience. You speak about your pride, and you don't want to be the one that lets down the company, the family member that does that. So I feel like resilience is not only something that kind of is a value that's close to you, but it's also something that you look for in other businesses.
And it's patience. It's patience. I'll give you a classic example. When we sold a deposit, a coal exploration area to BHP in the boom times for $2.5 billion. The reason BHP were able to pay it because it was right next door to their operations. So it was in the boom time, and everybody was pestering us, why don't you go and buy MacArthur coal? Why don't you go and buy Felix coal? And all this. But it was at the top of the market. So for 3 or 4 years, we had $1 billion sitting on our balance sheet, and I used to get criticised at AGMs and talking to analysts. What are you doing with $1 billion? What are you doing with $1 billion? So then we waited, and the opportunity of Bengala came up. Rio, the big companies are historically knowing for selling at the wrong end, buying at the wrong end. So we were able to buy 40% of Bengala from Rio at the bottom of the market when coal prices were $40 a tonne. And then 2 years later, coal prices were over $100 a tonne. So we've been patient. We'd never let the cash burn a hole in our pocket, and we ended up with a wonderful bargain. Mm. And it's probably if it's not the second lowest, it's the third lowest cost producer in Australia. So that mine, unless something tragic happens around the world, will always make money. Even at the moment, the coal prices are a little bit depressed, but we're still making a good margin on our coal. Mm. Whereas some of the mines in Australia are already closing up because they're not making money. Their costs are too high.
When I think about the portfolio and the types of companies that you own, we can say, there's pharmaceuticals, brickworks, obviously, so industrials, financials. A lot of these companies that operate in these industries are really like staples, if you think about it, of society, of the economy. And I've heard from someone in the team, maybe I won't give away names, but someone said to me that you don't necessarily get bogged down in the micro stuff. You're looking for the bigger picture stuff and solving problems, like looking for businesses that solve problems. Would it be fair to say that, less of your time is spent in a spreadsheet or doing valuations and more on, I guess, the bigger picture items?
Yeah. And obviously a lot of those investments started on a smaller scale, and we've taken on a few smaller investments in the last few years, which we hope will come forward in years to come. To give us a bit more energy underneath the pharmaceutical business and TPG, et cetera, et cetera. And we're very confident over time. One's a swim school, Aquatic Achievers. We're growing that business around Australia. Another one is called Palmer, which is grows morphine from poppy seeds. It's a classic example where the guy that started that business was able to produce the product using water where our competitors use chemicals. So we've got a 30% cost advantage on our competitors. So they're the sort of businesses, it's starting slowly. We've had a few teething problems with it. They're the sort of business we're looking to grow going forward, to come through and stand up beside some of our bigger investments in years to come. We've just put quite a bit of money into agriculture. So, we're not sitting back relying on the 3 or 4 main businesses we have. We still continue to look to grow the company.
And would you say that you're just as excited now as you have been in the past, the opportunities, not just in the next couple of years, but for the next decade or decades to come?
Yeah, as I said, if we can bring these smaller investments we've got at the moment as I said, to sit beside these other ones, and we're also very fortunate at the moment. We're in a good holding of cash. I would think in the next 4 or 5 or 6 months there might be some quite good bargains around. So we'll be in a very strong position to move in. We bought. I said I'd go back and talk about this. We bought NBN Television. I don't know how many of your listeners will remember Christopher Skase and Alan Bond with Channel 9 and Channel 7. There was a West Australian guy called Kevin Parry who bought NBN Television. It was the highest rating. It was a Channel 9 affiliate in Newcastle, highest rating TV station in Australia. He used to send a helicopter up from here every day for people to go and have a piss up for lunch. And of course, they went broke when Skase and Bond went broke with 7 and 9 as well. So that was our start into now what is TPG, because with the advent of digital TV, we paid $38 million for that TV station. We sold it for $250. We started up SP Telemedia, and now we own 12.5% of the Vodafone TPG merger, which is valued at $16 billion. So, they're the sort of things, if you're patient and you've got cash. We moved on that TV industry when no one else wanted to know it. It was a dirty word. People had blown the business up, and then we were able to go and put telecommunications together under that. So
it's really incredible when you think about that, the numbers, the timing, I guess, and just zooming out a bit and thinking, maybe in decades as opposed to what most people think about in terms of months.
Yeah. Well,
when you sit on the boards of these companies or you chair them, do you think that exposure is real? Do you find that's really important for you as a capital allocator to think, to see management, to experience the warehouses or the facilities firsthand? Does that give you some sort of advantage because you have that insight?
Yeah. You can't run an operation being a director or a chairman by sitting in a boardroom once a month. And I'm fortunate I'm not once a month, because I'm chairman and I talk to my managing directors, etc., a couple of times a week at least. So I'm more hands-on, but you have to get out and look around. And as I said before, when you walk around these operations with the factory manager or whoever it is, the plant manager, talking about their plant, it gives you a sense of owning, and there's good trust and skin in the game in those businesses. You can't. Again, I go to places that I'm sure the chairman of CSR and the chairman of Boral have never been to masonry factories, and these places in Cairns and Townsville, I'm sure they probably don't know where it is. But this is the way we operate. We're people's people. We don't sit in an ivory tower and hope everybody underneath us will do what we want them to do.
For sure. Where do you think then, if we take these studies of investors, fund managers, and as you mentioned before, you interact with a lot of analysts, I'm sure. Where do you think they go wrong? Is it the patience element? Is that where they go wrong?
Well, unfortunately, in you talk about funds management and those types of industries, apparently, unfortunately, these guys are benchmarked on each quarter, which anybody that's been around a long time tells you they can do something in a quarter. It's madness. So these guys are all looking for how they can perform in the next quarter or the next 6 months. It's not what their portfolio is going to go in 5 or 10 years, because they've probably moved on or something's happened in that period of time. So, and I think the other thing is that a lot of them forget that it's other people's money that they're managing. To me, I'm very anti what's going on at the moment with this short selling, with people's superannuation money. Why should people be shorting the stock when superannuation money is looking to grow that stock over a period of time, and then some of these people are lending so people can short it? Like, it It doesn't make sense to me. Again, I'm an old long-term thinker, and that's why I sit on the chairman. I'm chairman of two publicly listed investment companies, and they manage shareholders' money for less than you can run it yourself. There's no performance fees and these sorts of things. But there are some exceptional fund managers who have done very well, and I get on well with them. But there are some who I don't think are running the businesses for. I think they're running it for themselves, not for other people's money.
Yeah, definitely. Something that I see, Rob, is the incentives, and you see that. I guess that mismatch between expectations or outcomes and how we should be measuring things versus the focus and the time horizons of reporting, and quarterly, monthly. It just makes it all a bit. I don't know. There's that. I guess that mismatch there. It creates a lot of issues. How about for you? When you get to speak to other investors or CEOs, can you recall anyone in particular that has jumped out to you? Maybe there's more than one person who stuck out to you as a really good investor and someone that you really admired?
Well, obviously, I've been fortunate, and I couldn't go this year, unfortunately, to been at the last 5 of the last 6 Berkshire Hathaway meetings in Omaha in early May. And obviously, I've always admired Warren Buffett, and strangely, we've been quite often regarded in Australia as the Berkshire Hathaway of Australia. We're nothing like the scale of what they are, of course, but obviously you see what old Charlie Munger and him have put together. And as I said before, there's some wonderful fund managers in Australia, guys like Peter Cooper and Anton and Peter Morgan, and we have one former one sitting on our board at Souls at Warwick Negus. They've done famously well, very, very made a lot of money for their investors. It's like
sorry, go on.
It's like everything. There's some always good people, and there's some always people not probably doing the right thing. But I've been fortunate to meet a lot and have some involvement with some of these successful people. I've never met Warren, of course. I would have loved to. But they're the sort of guys you take your hat off to.
For sure. So I've heard before that you are quite an avid reader. And this is something obviously we've talked about before. But what are the types of things that you like to read, and are you reading daily?
Obviously, I don't get much chance to read other things apart from sort of board papers, and I enjoy reading the newspapers every day, and I get broker reports, etc., etc. As I said, I used to do a lot of travelling, but the sort of books I like taking away, and there's been some quite good ones come out over the last few years on actual individuals. Like there's a very good book out on Phil Knight from Nike. I've read the book on Elon Musk from Tesla. They're the sort of books I enjoy. Obviously when you get away, particularly if I can sneak away for a couple of weeks a year with my wife and sit on the beach and not do much, they're the sort of books you can take, and if you fall asleep after 10 minutes, you can pick it up again quite easily without losing too much of the gist. But I enjoy reading when I get away, but unfortunately I don't get much of a chance.
Not when you're sitting on so many boards and...
Well, the biggest problem we all face now is the board papers and annual reports have become so complex, and pages and pages and pages on diversity and risk, and it's no wonder mums and dads can't understand what's going on anymore.
Yeah. Bro, I know you've done a few interviews over the years, and why I was really excited about this is because I get to sit down with you and have this conversation and hear from you your lessons, I guess. But if you were in my position and you wanted to ask yourself a question, something that you're really passionate about, or a topic, or something that you want others to know more about, what would it be if you have anything?
Oh, that's a hard one. Obviously, I think if you've got common sense, I think that's going to take you a long way. Of course, we're all different. Some people are good at this, and some people are bad at that, and et cetera, et cetera, et cetera. But I think generally, if you and I'll go on another step for people. If you can think long term and always have some cash, anyone that put money into the market whenever it was 6 or 7, 8 weeks ago has done very well. And be patient. Not many people make money overnight. Very few people make money overnight. People will tell you that are avid share traders, they only tell you about the ones that they win on. There's a lot of people lose a lot of money share trading. But I'll give you a couple of examples of the last GFC. I can remember buying Macquarie Bank for $22. Commonwealth Bank, I think $27 or $28. They've paid $40 in that period of time from the GFC to now, just in dividends. The share price has gone from $28 to what they say, $60. They have been up to $90. So again, if you ever had that ability and you were patient, and again, the last 2 or 3 years, people have been saying the market was hot, the market was hot, the market was hot. And then we had that period, as I said, 6 or 8 weeks ago, where people were able, if they had cash, they could hop in, and I think BHP got down to $25 or $26. Macquarie got down to $75. They're back to $120, and you've got a dividend on top of that as well. So there's good scope if you think long term, have some cash, and be patient.
I think that's a wonderful way and a fitting way to end the recording, Rob. Once again, thanks for your time today, and all the best with reporting season and all that's to come for you.
All right. Thank you very much, and thanks to everybody for listening.